Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern. Thank you for joining me today for another Trader Bite after a several day absence, 3 day absence. Last Trader Bite was done last Wednesday. A lot going on here as I'm visiting family here in Canada, events and emergencies and so on. So I'm trying as best as I can to get back in the saddle and in the rhythm of things. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning, I'm seeing a mixed market, but mainly it is bullish on equities. It's allocating to risk. The U.S. Treasury bond is the laggard, down 0.73%, one handle and four ticks. Pretty big drop there, followed by the Eurobond, the Japanese yen, the 10-year note, and the US dollar, and then gold. So that's telling me that money's moving out of safety into risk. Crude oil leading the pack, up 91 cents at 47.24, up almost 2%, followed by the Euro stocks and the DAX, and then the mini Russell. Overall, the market's trading higher on equities and energy. So overall, a bullish looking market this morning. As far as what has driven us, a big driver yesterday was the release of Alphabet's earnings. Uh, the earnings were strong. The company beat its top and bottom lines, but shares are down by more than 2% ahead of the opening bell. People were expecting a bigger beat on the top line, and we didn't get that. But it also Alphabet is also incurring the largest fine ever by the Eurozone. I think I read somewhere it's 2.6 billion or something, which is a lot, which is about 10% of their earnings this quarter. In addition to that, we have the Fed kicking in a 2-day meeting starting today. The market's pricing in a 0% chance of an interest rate hike at the end of this meeting. But traders will be on the lookout for any hints about the Fed's plan to unwind its massive balance sheet. That's what the traders are looking for. Also today, Republican senators are getting together to vote to allow debate on health care. This is a pretty big deal. You know, they've been talking about Obamacare for 7 years or so, and looking to beat it down. And it's time for them to act since they have all the power. So we'll see how that plays out in the markets and how that affects the healthcare and biotech sectors and so on. Also this morning, we got several key releases and earnings. Earnings beat across the board. There were many companies that reported: Biogen, Caterpillar, General Motors, McDonald's. 3M is the one that came short by a penny on its earnings, reported $2.58 versus $2.59, and also on revenue, 7.81 billion actual versus 7.88 billion expected. And United Technologies also reported this morning. Overnight in Europe, we got the German IFO, July IFO business climate number. 116 versus 114.9 estimated. Very strong number. The German businesses are euphoric. Germany's IFO Business Climate Survey hit a record high for a third straight month. So very strong there. We see a reaction there in the DAX and the Euro stocks. As far as what we're expecting going into the session here today, we just got the S&P Case-Shiller numbers, FHFA Housing Price Index as well. We're expecting consumer confidence at 10 a.m. Eastern. We're looking for July, and that's 116 is the figure. 116. The prior is 118.9. At the same time, we're looking for Richmond Fed. And then other than that, we're not looking for much in the way of speakers. Again, I want to remind you that the FOMC two-day meeting starts today at 9. It already started 6 minutes ago. And then after the market today, we get AT&T and Amgen reporting. Okay. I don't have a recording of the prior, I didn't do any talks um, over the last couple of days, so there's nothing to review. So I'm going to hop right in, and I just want to do a kind of an overall look at what we've done. To start out, I want to look at the weekly profiles, how the market's been interacting um, weekly. And if you recall, once we busted through this inside week, the week of the 3rd of July, it was a short week, basically a 3-day week. Once we busted through on the week of the 10th, I had cautioned that the all-time high at 151 quarter was likely to go out later that week. We did take it out on Friday, and and we've continued since. We closed strong on Friday, and then we're just basically making higher highs until last Friday. And then yesterday, we are holding on to Friday's range. We had a neutral day yesterday, but here again, I'm not seeing any reason for anyone to be strong bearish at this point. I know there are a lot of people who are looking to sell um, every new high, but overall, there's no reason, as far as I can tell, to decide that this is done on the upside. I mean, it's within earshot at 2,500, which is another century figure, century handle in the S&P, big strike price, and the market's just not backing off. Earnings are still strong. There's a lot of room still, believe it or not, for upside. So it's, to me, what these profiles are saying when we split these sessions. This one doesn't need to be split really. Hang on, split. When we split these sessions, we see that the market's showing gaps in strength going up. We're seeing these gaps and pretty decent strength. Every week we're getting a pretty decent push up. So that's the overview on a weekly basis. Coming into the daily, here we are. We've been in this funky balance zone from 23.49 quarter to 24.51.50 for quite some time, and we broke out of that last week, and now we're creating this island up here. Um, this island up here, and we are breaking above that. So again, there's a lot to work through in this zone here. There's a fair amount to work through in this zone here below that. And then we're back to that 24.35 quarter figure that we've played around with for some time and so on. There's a fair amount of support underneath. I'm not seeing, just on an evidence-based view, I'm not seeing much in terms of the market backing off. The ranges are small, the volume's light, the VIX is low. VIX is trading at 9.12. All indications are that the market is not fearing anything at the moment. So down to the 15-minute. So we made this gap last Wednesday. A gap remained open, and we are trading above it, much like we made this gap a while ago, the Wednesday before that. And then the market is just trading higher. So Wednesday, gap up, continue higher. The following Wednesday, gap up, and we continued higher, new all-time highs, and are sitting sideways. Overall, not seeing too much there to play with, other than balance here, balance, and with an upward skew. I would frankly love to see a sell-off day. There's a lot of energy built up here since last Wednesday, since the 19th. A lot of trading that has occurred in this zone here. 24.69 is the point of control, and we have been snaking around it, and now we're breaking out. This is a nicely Gaussian profile for an MC. You don't see that often. Very well balanced profile, very fat profile, lots of energy to continue higher or to make a strong move out of here. And we see the move is higher. We're trading at 24.7650. So again, just not seeing anything other than balance, chop, push up, break higher, balance, chop, push up, break higher on a continuous basis. Nothing here is indicating anything different. The overnight session, sideways on the Asian session. Here it is, the Asian session right up to here. Okay. And then from here on out, it's Europe, and it's just been strong. Since the European markets opened, we've been trending up. This is a trend up day on the overnight. You could see that we're forming very tight high volume nodes with very clear low volume nodes. This market's not able to find any consensus, keeps testing higher, consolidating, accumulating energy, testing higher, consolidating, accumulating energy. A very clear trend up, and a very clear trend up, and it just doesn't seem to want to abate. The overall overnight inventory is squeezing shorts. It is long. The overnight inventory is long, so I'm looking for some sort of a rebalance on the open. I'm looking for the market to revert just a little bit, but then again, we have not been able to fill gaps in the past. I don't, I believe in Newton's laws of motion. You might as well call them Newton's laws of the market, where unless something acts on this to the downside, the expectation is more of the same. So I'm going to trade with the idea that we're likely to see more of the same participants, same behavior, unless something dramatic changes, which causes a loss. But that's okay because then it creates opportunities as the market, gyrates and trades to the other side. As far as what I'm expecting today, my expectations this morning, let's enlarge this. I have not put up my measured moves above, but my expectation this morning is an open auction out of range. I'm looking for the market to attempt to revert, hold, break the opening swing high, balance for a little bit, and then look to push higher. I'm looking for a move, the impulses to be upwards before it stalls in the 24.85 area and comes back. I'm expecting a profile that looks something like this in a double distribution profile. That's what I'm expecting today. I'm looking for it to open, fight to get lower, break higher, hold balance higher, and then sell off in the afternoon, probably back to the 50% line or mid of the day or so. If by any stretch of luck we get, not that I'm bearish, but by any stretch of luck, we get a nice move up on the open on a continuation of the overnight, and then we have an impulse down that then is not able to recover, then we have what I think is a much nicer trade. Impulse down, look for the continuation push down into the prior day's range. 2470 is strong. There are multiple tops here at 2470 or a triple top. There's a triple top there. Expect a bounce there, and then if it breaks through, then we're looking for 2469 even before the market balances out on the close and starts to float up on the close as it often does. And in this situation, I'm looking for a P-shaped profile that starts high and then finishes lower, right? So that's what I'm looking for as far as the secondary hypothesis. The tertiary or third hypothesis is an OTD, open, test down, push up, no gap fill. If the gap is not filled within the first hour, the probability of it getting filled for the rest of the session is diminished. If we don't get a gap, so if we open, test lower, and then push higher, that I'm looking for, push clear to 2490. We're at 2475. That's 15 points. That's about the extent of how much range we're likely to get to the upside. Hypo 4 is an open test drive up, and then that fails and pushes down. So open, push higher, find its sellers, which is not likely, and then start to drive lower. And in that case, it is likely to push all the way down to 24.65 and then hold steady, no gap fill today. Okay, those are the ideas for today, the plans for today. I did have a small thing I wanted to say today, but I'm out of time here. I'll talk about it tomorrow. I want to talk about how important it is for military operations as well as for medical professionals, as well as for anybody else who deals with life and limb, to do a post-mortem of any operation or any major thing that happens. But also in the military, they do a pre-mortem, and in the medical field, they sometimes do a pre-mortem as well. In preparation, in a pre-mortem, all they're doing is assessing where the risks are and what could go really badly, and then plan for that. And that's what these hypos are for. It is sort of a pre-mortem, but we don't focus so much on what could go wrong and what risks there are, and try to mitigate that. We focus more on what the market's likely to do. So it's not quite a pre-mortem, but it's the same kind of idea. We're not here to predict where the market goes. We're here to figure out our plan for whatever it does and how we're going to respond to it and what to expect. That's what we're here for. Good luck today, and I'll catch you tomorrow. Take care.